Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera. Hi everybody. So in this topic, we are going to discuss about consolidated fund. This is chapter 7. But before we begin, let me just refresh your memory regarding our public sector accounting course. If you can recall from our pro forma, there are actually 4 clusters or 4 different sub areas in public sector accounting. The first one is on the introduction to Malaysian public sector or Malaysian public sector accounting. The second part is on management accounting, accounting and control, which consists of 3 main topics: budgeting and budgetary control, budgeting system, and the performance management. Now we are going to move on to the third part or the third subtopic, which is on financial accounting and reporting. And chapter 7 or consolidated fund is the overview of this particular financial accounting and reporting part before we venture on to other subsequent topics. Now let's begin. Let's have a look at the learning outcomes for this particular chapter. Okay, so in this chapter, we are going to have a look at the definition of fund accounting. Okay, I know that accounting itself is a fund subject, but this is a different kind of accounting system, fund accounting. We will look at the definition and the characteristics of fund accounting later on. And also we are going to determine the objectives of having fund accounting, especially in the context of public sector. Next, we are going to look at the regulatory framework associated with the establishment of consolidated fund. And also we are looking at the relationships between the 3 types of consolidated fund account, and we are going to discuss in detail about these different types of consolidated fund account, which is number 1, the consolidated revenue account, consolidated trust account, and finally the consolidated loan account. Okay, so what is fund accounting system? I think I might have mentioned a few times in our lecture that Malaysian government operates its accounting system on the concept of fund accounting. And as a matter of fact, not only Malaysian government but a majority or most of the countries in the world also utilize the concept of fund accounting. So fund accounting is actually an accounting system that records the source of funds and how these funds are being spent. So meaning to say the in and out of money that we have in the public sector, where we receive our money from and how do we expand or how do we spend the money or the resources that we have. So the idea of fund accounting is to reflect the stewardship and accountability functions of the public sector, because as we know that in the public sector, one of the challenges is that we have very limited or very scarce resources, in which we need to plan very carefully for the activities or for the programs that we want to conduct. So we must give priority maybe to certain activities over another. And you have also learned about the concept of value for money. And the 3 is concept, the economy, efficiency, and effectiveness. So that is why the function of control and accountability is very important, and fund accounting system actually helps the government or the public sector to realize these 2 functions. Okay, so now this is the definition of an accounting system given by this particular accounting body, public sector accounting body in the US. Fund accounting represents a system of financial record keeping in which this system focuses on how the organization uses its finances. So we have seen before that fund accounting is concerned with the in and out of the resources in the public sector. So similar to any other accounting function, it involves the activity of analyzing, recording, summarizing, reporting, and interpreting or communicating the financial transactions associated with any particular government. Okay, so this definition here in this box actually highlight several characteristics. Some of the characteristics of fund accounting, in which a fund is a fiscal and accounting entity with a self-balancing set of accounts that intends to record cash and other financial resources together with all related liabilities and residual equities or balances and changes therein which are segregated for the purpose of carrying on specific activities or attaining certain objectives in accordance with special regulation, restrictions or limitations. So we can see that from this definition that fund accounting system by itself is set is a self-balancing set of accounts. We will see later on that there are three major accounts under fund accounting or under consolidated fund. Okay, sorry. And then all these three accounts, they are self-balancing, meaning that they are independent and don't depend on each other. And then this fund accounting system also have very specific objective, intended for specific activities to achieve specific objective. And similar to any other uh, recording of financial activities in the public sector, it must adhere to special regulation, special restrictions or limitations as outlined in the relevant laws and regulation. So, in this sense, and also as I have mentioned or we have seen before, fund accounting emphasize on accountability rather than profitability because, well, of course, in this context, we are talking about public sector accounting or public sector. So, we are not really concerned about profitability unlike in the public sector, in the private sector. All right. So next, okay, so I have mentioned that by looking at the definition of fund accounting, we can actually extract a few characteristics of fund accounting from there. Okay, so number one, each fund is an independent accounting entity. Okay, so in Malaysia, under our consolidated fund, we have three main accounts, which are the revenue account, the trust account, and the loan account. So this account of fund, we call it as fund, is an independent accounting entity. Okay, whereby these three types of fund can stand on its own. Decisions are made independently regarding the best use of limited resources, meaning to say that they don't depend on other account in order to manage their own funds. So in fund accounting, each fund has a separate tracking system set up by a specific function. Okay, so in this sense, the second characteristic is that each fund has its own set of account with complete double entry and financial statement. Okay, in the next, I think in chapter 9 maybe, we will look at the federal government financial statement, and we can see from the financial statement that the three fund account, revenue, loan and trust, will have their own separate account. Okay, it has its own transaction, its own recording, which actually reflect the characteristic of the independent accounting entity. Number three, each fund must be self-balancing. Okay, again, independent, own set of account, and it is also autonomous. Okay, meaning to say that they are responsible for their own fund, for their own money. So total asset of a particular fund must equal to the total liability and fund balance or capital. So this is just basic accounting system or accounting transaction, right? Okay, here we can see the purpose of fund accounting. There are three, and these purpose actually are quite generic. Okay, number one, to determine the financial position and its changes in the organization, which is similar to any other accounting system in the world. To determine the results of operations of the organization. Again, although we are not profit oriented, we are more on the discharging our accountability function rather than profitability. Still, it is very important to look at the result of the operation, because as we have learned in the previous chapter, performance management, it is still very important for us to evaluate our performance and also to see how well we have used or how well we have utilized the public monies or public fund. And number three, again, this is also similar to any other accounting system, but it is much more important in the context of public sector, is to check its compliance with legal restriction. So because we have our Jabatan Audit Negara, National Audit Department, to come and visit all the government agency at the end of the period to see whether all our transaction has complied successfully with the legal restriction, any relevant rules and regulation. However, as you can see here, these are actually the special characteristic of fund accounting. So fund accounting evolves from the need to report and account for resources that can be treated differently. So because we have the three different types of account, which are the revenue account. Okay, sorry for the bad handwriting. We have the trust account, we have the loan account. So all these three, okay, they have different functions and therefore must be treated differently. Account for resources tied to specific function. Okay, so because these are all self-balancing, autonomous, independent account, so they have a specific function, they have specific resources, and account for resources whose use has been restricted by others such as donors or government. Okay, because we understand the concept of scarcity or limited resources. Therefore, the use of fund by either the donor, sometimes we have donor to give money, out to the government, and then this money is restricted by the donor or by the government to only a specific function. Okay, if let's say it must be used for development, then it is for the function of development. If it is if the money must be restricted to the use of the, let's say, the B40, then the use of money must be restricted to the use of activities associated with B40. So this is what the explanation means. Okay, next is the regulatory requirements for having to set up fund accounting in the Malaysian public sector. So, the punca kuasa, the source of power. Okay, so fund accounting system is set up based on the requirements of two main laws, which is number one, the Federal Constitution, and number two is the Financial Procedure Act itself. So these are contained in the Federal Constitution, which means that it is compulsory for the government to have this consolidated fund. Okay, so under Article 97, 1, 2, 3, Okay, and 4 actually. Federal government accounting is based on the concept of consolidated fund, kumpulan wang disatukan. Okay, in which all revenue and money raised or received except those that are associated with the religious authority, zakat, fitrah, baitul mal or any other Islamic religious revenue. Okay, that one goes under the jurisdiction of the state government, have to be paid into and form one fund known as the consolidated fund. Okay, so 2 times already I highlighted the word consolidated fund. So this is under Article 97. As you can see, you can have a look at the details of it later on. Okay, next is still under the federal constitution. Okay, so Article 104 mentioned that any withdrawals from consolidated fund. Okay, so this particular article we have looked at in the previous chapter under budgeting or budgetary control. Okay, in which it is stated that no monies shall be withdrawn from the consolidated fund or the account of the government, okay, the government account, unless they are charged on the consolidated fund for a specific purpose. They are authorized to be issued by a supply act. So this one is under discharged under the budget. Okay, after our budget has been approved by the parliament, so we want to issue the warrant and whatnot, and then authorized to be issued under article 102. So what is 102? 102 is powers to authorize expenditure on account or for unspecific purpose. So before the passing of the supply bill, the parliament actually have the power to authorize any expenditure that is not in the supply bill or the not supply act lah, not yet become the supply act, in the supply bill. So anything, for example, we have in our previous years we have the COVID-19 trust fund, so that one comes under article 102. Okay, so this mentioned here, unless appropriated or otherwise authorized by the parliament, no monies except specified charge expenditure. Okay, I think you have learned about charge expenditure, shall be withdrawn from the consolidated fund. Okay, next. Under our Financial Procedure Act 1957, so this is a major regulation in the public sector, very important to remember. Section 7A to C stated clearly that the consolidated fund is going to be divided into 3 separate accounts, which is the consolidated revenue, okay, the consolidated loan account, and finally the consolidated trust account. Okay, so these are the 3 types of account with different with 3 different functions. Okay, consolidated revenue, the aim or the objective of consolidated revenue is different from the consolidated loan, and definitely the consolidated loan is also different from the consolidated fund. But the act stated that these are the 3 main accounts that need to be maintained by the government under the consolidated fund. Alright. Next, again in section 16, subsection 1 of the same act, this section states that at the end of every financial year, the authorized financial authority is expected to prepare a number of key statements. So this actually refers to the government, the federal government financial statement, and we will revisit this section again later on in the next chapters, which is in chapter 8 if I'm not mistaken, and also in chapter 9. So this section is very important, in which in every financial statement of the government, they will mention about this section and the source of power, okay, the punca kuasa, from where they need to prepare the financial statement for the government. So this is like the source of power, section 16, subsection 1, for the government to prepare a set of financial statement based on the concept of fund accounting with three different accounts: the loan account, the trust account, and also the revenue account. And also under subsection 1, subsection 2, definitely with regards to the auditing function in the public sector accounting. It needs to be examined, it needs to be presented, needs to be authorized by the parliament. Now, apart from the two major laws, the Federal Constitution and the Financial Procedure Act, we also have our PPK, Piawaian Perakaunan Kerajaan, the Government Accounting Standard, uh, which are intended to set accounting policies and standards as well as the basis for financial statement presentation that comply with both the federal and state government. Okay, so this is also in line with the Federal Constitution and Financial Procedure Act. So under the cash basis accounting, okay, so at the moment we are practicing at the federal government level, we are still practicing the modified cash basis accounting, and we intend to move towards the accrual accounting basis. But under the modified cash accounting, currently we have 10 PPKs, Piawaian Perakaunan Kerajaan, and we have 4 that are, 3 very much specifically related to the consolidated fund, and we also have one quite related to consolidated fund. So there is a very specific PPK for account hasil disatukan, consolidated revenue account, which is PPK 3. We also have PPK 4 for the account amanah disatukan, this is for trust account, and PPK 5 account pinjaman disatukan or consolidated loan account. So these are very specific PPKs on how the government or the public sector should prepare the accounts with regard to these different types of funds: hasil, amanah, and pinjaman. So for the accrual basis accounting, no need to worry about that. We are using MPSAS, Malaysian Public Sector Accounting System, which is similar to IPSAS. So there is a different story. Alright. Now this is the overview, the illustration of the process under consolidated fund. Okay, so we know that the under the Federal Constitution and the Financial Procedure Act, the government account is based on fund accounting concept, in which it is required by the laws to set up the consolidated fund account. Okay, consolidated fund. And under this consolidated fund, we have 3 different accounts, which is revenue, trust, and loan account. Okay, although it is mentioned that one of the characteristics of the fund accounting system is that these fund accounting act independently, autonomously, they don't rely on each other. But actually the source of money and where the source of fund and where we transfer the fund are actually quite related. So the independent or autonomous characteristic is only when trying to what we call record the transaction and to balance the account. Other than that, as we can see here, they are actually quite related. Okay, for example, under revenue account we have the of course under revenue we have the revenue, but it's not stated here. But these are just the two types of expenditure: the charge expenditure and supply expenditure, which by now I think you have some understanding about these different types of expenditure. This goes under the budgeting, if you can recall, kan? Budgetary control. There are two main types of expenditure: charge and supply. And then for supply expenditure, okay, these are the for the operations of the government. Some of these will go to the government trust fund. Okay. So you can see that we have some contribution here. Okay, the revenue that we receive then will go to the government trust fund, the housing loan fund, the development fund, which we will look at in detail later on. Okay, so you can see that there is actually an interrelationship between these two accounts. And then for our trust account, there are different. This is not actually accurate lah, but this one is taken from the Jabatan Accountant Negara website. But the classification of trust account actually can be further improved. And we will look at the classification later on. These are the different trust account that we have under the different accounts that we have under trust account. Okay, very confusing. Okay, and then apart from the contribution made from the revenue account, we also receive transfers from the loan account. So this is quite obvious, right? You make a loan in order to finance your operation, betul tak? So you have a loan, you make the loan in order to finance the development, the operation of the country. So there are certain transfers from the loan account to the trust account here. Okay. You can see that there is actually some relationship between the three different types of account. But as I mentioned before, these three accounts will be recorded separately. Okay, and they will have their own set of their very specific own set of account. Alright, so this is just for your information. I think I mentioned this before. Accounting basis at the moment is the modified cash basis accounting. Okay, next we will look at in detail. This is quite boring actually. The the three types of account that we have under consolidated fund account. Okay, so we have the first one, the revenue account. Okay, so what is revenue? I think the terminology itself is quite explanatory. Okay, so revenue account consists of all types of money or revenue received. Okay, all money or revenue received by the government except loan and trust. So sometimes the government make loan either domestically or internationally, overseas from the foreign institution and whatnot. But those are not accounted in the revenue account. So we have learned that there are different types of revenue. Four types kan. Ada 4, the saluran revenue from Malaysia. So those revenue will be transferred into the consolidated revenue account, except for loans and trust. Trust account is very specific. It must be used for specific purpose. Sometimes it can be donated by certain organization. You can have private organization or international organization donate the money to you, or it can be transferred from the loan account. Okay. So this money and revenue must be accounted for in the consolidated revenue account, and this money will then be used to maintain the operating expenditure, which include the charge expenditure and the supply expenditure. Okay, so money coming in and money going out from the consolidated revenue account to the charge and supply expenditure. Okay. As mentioned before, anything, all the money, the revenue received, except the one under the jurisdiction of the religious department for each state, will go into the consolidated revenue account. Okay, so I think we have looked at this structure before, right? The process, we have the revenue, the operating expenditure, and the charge and supply expenditure. So all those things actually comes under the consolidated revenue account. So kita dah tengok before this, in order for the supply bill to be in order for the budget to be discharged for use, must go through certain process, and then the money will come out from the consolidated revenue account. Okay, I'm going to skip this part, assuming that you have already understood the process. Okay, next is the consolidated trust account. I made a mistake when I was preparing this slide because actually when you look at the federal government financial statement, the sequence is they will discuss the revenue account first, then they will discuss the loan account, and after that only they will discuss the consolidated trust account. But because we have so much under consolidated trust account, then for certain references also they discuss the consolidated trust account first, therefore I just follow the structure. Okay, so what is under consolidated trust account? This particular account is established to account for all receipts and payment of trust funds and monies received by the government for specific purpose. So this is the keyword here, for specific purposes. Okay, so sometimes the money can come from the government, sometimes it comes from some other sources. So all receipts and payment of trust money shall be accounted for and maintained in accordance with all relevant acts, rules and regulation of trust. So this one is under the PPK number 4, which is account amanah disatukan. Okay, and it must follow the format outlined in PPK number 2, persembahan penyata kewangan kerajaan. So this is very the format is very detailed, very specific. So as you can see here, consolidated trust account, the sources of fund can come from these various sources. The fund can come from various sources that include government appropriation. So we can see the government actually let me go. I cannot go back to the previous slide. Sorry, because this is in slide presentation. It comes from government appropriation, meaning to say that the government from its own revenue account will transfer to the trust account. Transfer from loan account. This is very famous. Government make loan in order to finance the trust account, and also from repayment of advance or loan. Okay, so there are three categories of trust account, which is the government trust fund, public trust fund, and deposit. Okay, or deposit accounts. So it's, as you can see here, the government trust fund can actually be further categorized into development fund, housing loan funds, miscellaneous government trust fund, and most recently, we have in 2020 the COVID-19 fund. Okay, so this COVID-19 fund still appears in our financial statement up until today. So we still have a balance. Therefore, we need to report on how we manage this particular account. Okay. Now, let's have a look at these different types of fund that we have. Okay. So, for the government trust fund, okay, if you can recall, there are uh, different categories. The first category is government trust fund. This account for receipts from government allocation, okay, government allocation, as well as public donation and payment for specific purpose in compliance with Section 10 of the Financial Procedure Act. So the main source of fund from this government trust fund is the appropriation from the government. So it's in the budget, for example, or they have already allocated certain amount of fund, okay, into this particular account under the government trust fund. So we have several accounts under government trust fund. The first one is development fund. This is a trust fund set up in accordance with the Development Fund Act 1966 with the intention of enhancing the economic development of the country. So you can see that under the development fund, actually there are many different activities, but all these activities must be focused on the economic development of the country only, for no other purpose. No other purpose is allowed. So where does the money come from? From the consolidated loan account. Okay, we make loan and then we transfer the amount. Okay, and the loan account also, the loan must come for the purpose of the development. Very specific. Contribution from, as I mentioned earlier, sometimes it can come from the appropriation from the government, from the consolidated revenue account, and repayment of loans given out from this fund. So sometimes what happens is that the government give out loan in order for certain companies or the private sector to take up certain project or certain activities. So when they give out loan, then this loan must be paid definitely lah with interest kan. So therefore the repayment of loan will then be dumped in back into the system. Okay, rolling to finance this development fund. Okay, so that is development fund. This one is quite very straightforward. And then we have the housing loan fund. This is not very famous. Only just like one sentence in the financial statement, government financial statement. This is specifically to finance the government housing loan scheme. Okay, so as a civil servant, I think some of you must have known already. Civil servant, they are entitled for government loan. They are entitled for not personal loan, for housing loan, for vehicle, and computer. Saya tak ingat lah. Saya rasa itu je. Okay, saya pun ada housing loan ni. So finance the government housing loan scheme in accordance with the provision of the Housing Loan Fund Act 1971. Okay, so this is the aim to provide housing loan facilities to the members of the public servant, and the money to be used in this housing loan fund come from the again consolidated loan account, in which it must be raised through transfer from loan account. Proceeds from loan raised through transfer from loan account. So it must come from a very specific source. And also contribution from the revenue account and housing loan and repayment of loan given out from this fund and interest earned, similar like this one. So every month, those who make loan or those who borrow from the government, they must pay, and this money is then being transferred back to the housing loan fund. Okay, so also again this is quite straightforward. Okay. Next, we have still under government trust fund, we have the miscellaneous government trust fund. So this is quite tricky, miscellaneous. So we have a lot actually at the moment. Let's see. In 2021, the federal government supervised 149 accounts alone under miscellaneous government trust fund. So this particular trust fund or this particular account accounts for specific trust purpose in accordance with section 10. Part of the fund are revolving in nature while others provide for outright payment. So this fund can be used for a very specific purpose. It can recur from year to year basis. Some is just being used for one time only. Okay, so it really depends on the nature of the purpose for having to set the trust account. So the source is government appropriation. They have 5 different categories: clearance account, trading account, loan account, contingency fund, and other trust fund. So these are some of the example of the trust fund that have been set up under miscellaneous government trust fund, national trust fund, post student fund, examination syndicate fund, examination syndicate trust fund. Okay, on this side, I have taken the excerpt from the federal government financial statement for 2021 because that is the latest one that I can find. Unfortunately, 2022 is not yet published. So you can see that the miscellaneous government trust fund by category here, and we have the highest is under other trust fund. So as I mentioned before, a part of this trust fund are revolving in nature, meaning to say that the amount is not fixed. Sometimes you set up the trust fund for a specific purpose, and after the purpose have been achieved, then you will close the trust fund. And some trust fund provide for outright payments. Meaning that the amount is recurring every year. Okay. So the list is going to be under trading account. Now let's go to the next one, which is the COVID-19 fund, and this is the most recent trust fund that we have under the government trust fund. Okay, and the name itself is quite self-explanatory. This fund accounts for all receipts and payments as provided by the temporary measures for government financing coronavirus disease 2020. So the receipt of this account is from the transfer from consolidated loan account as well as miscellaneous receipt. So this come from the donation from various party. Okay. And the expenditure is utilized specifically for the implementation of the economic stimulus packages and assistance during the pandemic period. Okay, so you can see here again the excerpt from the financial statement 2021, the breakdown of COVID-19 fund expenditure, and the most part is for the BPN, Bantuan Prihatin Nasional, in order to boost our economic growth. Other than that, we have the wage subsidy, job retention, and workers hiring incentive, and many more for the employer and the employees as well. The expenses for other programs account for 17.5%, and we have the Prihatin SME grant. This is for the small business, and the support assistance, social assistance support for vulnerable group accounts for 7.5%. This is for last year. Okay, and under the consolidated trust account, we also have another category apart from the government trust fund. We have the public trust fund. So public trust fund accounts for all receipts from either the organizations, any kind of organizations, or individuals, and payment again for specific purpose. So this trust fund can be divided into two categories: the special trust fund, in which receipt and payments accounts for receipt and payments of specific purpose in accordance with any specific act. Okay, so it really depends on the need at that particular time, and also the government aspiration and also the donor. Okay, because this fund can come from the organization, so it really depends on what are their intention. Okay, and we also have the general trust fund. Okay, this account for the receipt and payment for specific purpose in accordance with the Financial Procedure Act. This one is under the Financial Procedure Act, and there are several, I would say, accounts that need to be maintained under the General Trust Fund, and this is the amount of money that they use. The money that they use is specifically for the particular activity that have been outlined under the Financial Procedure Act. Okay. Most of the time, this public trust fund is for the financing of government projects. So one very famous example, not only in Malaysia but also in other countries, is the here we call it as the PPP, public-private. I cannot remember what is PPP, or the Private Finance Initiative Trust Account. So this is where, in order to do some development project, the government, instead of doing it themselves, they hire another private organization to take up the job, because sometimes the development project is quite huge and this will be a burden to the government. to undertake the project. So what they do is that they will sub the job to another private institution or private company for them to do the job on behalf of the government. So this is under the Private Finance Initiative Trust Fund. But there have been a lot of controversies actually for this particular effort. Okay, but we are not going to go into the detail of it. So up until 2021, the federal government has supervised and managed 303 accounts of public trust fund with an accumulated balance of 23 23,772 million. Okay, and the public trust fund by category can be seen in this diagram here, in this chart here. Okay, so this is the amount, and a majority of it goes, as usual every year, it goes under the asset recovery trust account. Okay, and then we also have some under miscellaneous general trust account. So this is for public trust fund. Okay, next we have the deposits or deposit account. Okay, so deposit are monies received by the government for specific purpose. Again, this is the keyword because we're talking about trust account, right? Under any laws or contractual agreement, and that they need to be reimbursed once the purpose have been achieved. So once they have done their job, therefore this money need to be returned. Okay. And then close close the account lah, I would say. Okay, so this comprise of general deposit and adjustment deposit. For general deposit, we have the money received for specific purpose under any law or contractual agreement and are refundable once the purpose, the specific objective has been achieved, has been accomplished. And for adjustment deposit, these are just temporary account like nominal account that are used before payment or adjustment made to the actual account. So you just park the money there, okay, before the actual transaction is being carried out. Okay, so you can see here because of the nature of this adjustment deposit itself, the amount is very insignificant lah. I mean very little, very small, 1%, less than 2%, and then most of it is under the general deposit. Okay, an example of general deposit would be, as we have learned in chapter 3, if I'm not mistaken, chapter 3 or chapter 4, chapter 3, the deposit for the unclaimed monies. So we have learned that some amount will be transferred to this trust account. Okay, and then when it is claimed, it will be hand over and refunded. Okay, so this will come under the category of a general deposit. Okay, just to illustrate the amount of unclaimed money handed over to the government in 2021 and the amount that has been refunded by the government to the rightful owner. You can see here in 2020, the amount that is being handed over by the stakeholders to the government was 933 million in 2020, but in 2021 the amount has increased very significantly to 1065. So meaning to say there have been a lot of unclaimed money in the system, and this money is being transferred into the general deposit account. Okay, and then in terms of the refund made for unclaimed money, you can see that there is actually an increase a little bit from 2021 to 2022, but you can still see here that the gap is still very huge between the amount of money, unclaimed money that the government have, and the amount of unclaimed money that has been refunded, claimed by the rightful owner. So we need to be aware of that as well. Okay, next and the final one is the consolidated loan account. Okay, so the name itself is very obvious. So this account is established by either the federal or state government, both, because the consolidated fund concept is also being applied by the state government. This one is established at the state or a federal or the state level to keep all monies received by way of borrowing, by way of loan. So this one comes under the Article 111 of the Federal Constitution, and also Section 7B of the Financial Procedure Act. So just similar to any private corporation, the loan can be in terms of external loan and internal loan. Can be referred to as account that include all, what is this, consists of both external and internal borrowing, and can be referred to as an account that includes all loan receipts and as well as disbursement for the purpose of repayment of outstanding loan and transfer. Okay, so this one comes under the PPK number 5, which is for consolidated loan account, account pinjaman disatukan. So you can see here, these are the sources of fund from internal or external loan goes into the consolidated loan account, and then this loan account, the amount is being pooled and then will be distributed to first the trust fund, okay, and also the trust fund, most of it, and also to repay, to make repayment of the loan in terms of principal as well as the interest. Okay, so this is quite it's very straightforward, quite clear. Okay, I just want to show you the statistics from 2021 financial statement. In the financial statement, it is reported that the domestic domestic financing source via loans is the most significant contribution to the consolidated loan account. So this is not very surprising because it has been like this. Domestic loan is the main contribution to our consolidated loan account, which is actually quite good, because if you depend too much on the international loan or the foreign loan, then this could put you in a lot of risk as well, I think. Okay, so domestic financing, and this figure here or this illustration here differentiates between the sources of loan for domestic or the domestic loan instrument, to be more precise, and also the foreign loan instrument. So for domestic loan instrument, you can see that we have treasury bill, so it comes under very specific act: Islamic Treasury Bill, Sharia compliant, government investment issues, Malaysian government securities. So Malaysian government securities actually is the most popular loan instrument, domestic loan instrument for our government. Okay, so if we have the figure, maybe okay, maybe in the financial statement itself is too cluttered to be put on this slide. But this is like the main source of domestic loan for our country for since forever. Since forever. And then we also have sukuk, and then for foreign assistance we have foreign sukuk. We have the this one is growing actually. We have multilateral loan, we have the bilateral loans, and we have some bonds issued under the conventional system, right? Okay, so if we have a look at this illustration, this chart here, we can see, as I mentioned to you and also reported in the financial statement, we can see that from year to year, the domestic loan actually dominate. You can see that the amount sometimes increase, but for the last 2 years, it has increased quite drastically. Maybe because of the the economic condition is not very good. But you can see that we have a, a more significant, the biggest portion of loan under domestic financing source, which I think is actually not a bad thing. I think this is the last slide, and at the end of this chapter, I hope that you have learned about our accounting system being practiced by our federal and state government, which is the fund accounting. And in this fund accounting, what we do is that we set up a very specific account. We call that as a consolidated fund, kumpulan wang disatukan, and the establishment of consolidated fund is under the under the regulation, two main regulation, which is the federal constitution as well as the Financial Procedure Act, and then we also have the PPK, Piawaian Perakaunan Kerajaan, specifically tailored for the use of the three different types of account under consolidated fund, which is the consolidated revenue account, consolidated trust account, and consolidated loan account. And the next in the following chapters, I think the chapter after the next week, we are going to have a look at, if you have not yet have the opportunity to look at the government financial statement, we are going to have a look at the government financial statement, how it is being prepared, what are the items, but not too much lah, because it's very heavy. Okay, but some of the things that you have learned in this particular chapter will appear again in the financial statement, so that hopefully you will have a better understanding of the government financial statement after you have learned about our government account, which is the consolidated fund. Okay, thank you very much.